Ladies and gentlemen, welcome to the 29th episode of the Futurum Equities Podcast. You got myself, Stock Debbie Shay. You got Newman. We're both feeling the pain of the market the past week or so. How are you doing this morning? I know we woke up with a green screen, which is like the first time. Feels like forever.
So ugly. But, I don't use much leverage. I don't depend on trading. I'm not a trader, so I think you know that about me. I'm an investor. So I feel good about the companies I own. There's a couple of things I own and assets that have been quite uncomfortable this week, mostly crypto. It's been really hard to watch that. But anybody that's lived through 2022, because I can't go back because I'm old. I'm an old man here. But I was through, the financial crisis. I basically came into my adulthood right after 9/11. So I've been through some serious shit. And, but 2022 was one of the most interesting. It was one of the most interesting too, because growth was so obscene and there were so many shitcos in the market that were telling great stories. And I had invested in a few of them. This was a learning experience about investing in companies with no revenue and a great story, where they were basically VC companies that would access the public market through either, direct listings or SPACs at the time when that was super hot. And so I saw things go down 90 and 95%. The great thing is coming into this one, I definitely own some high growth, high beta companies, but I don't own shitcos. So nothing I own where I'm like, oh, this will never come back. So I'm looking at names, I'm looking at Robinhood, which I own. I'm looking at SoFi, which I'm own, that have been absolutely battered on good earnings, by the way. I'm watching Google and other names that, I cover that got sold off on amazing earnings, Chai. And I'm like, these are, I get that there could be more blood, but it's like everybody that's always complaining, like, oh, I missed this at whatever price. Like I should have bought SoFi at 15. I should have bought Robinhood at 30 or 40 or 50 or whatever, 70. And now they're all, oh, it's going to, it's like the psychology is wild to watch because it's like they finally come back in price and everybody freaks out. I should have bought Bitcoin at 70, 80, 90. And where are the buyers, dude? Where are they? They're, so the psychology of this is super wild.
The goalpost always gets moved whenever people verbalize a comment like that. I think the most common comments was Bitcoin is 75. I'm going to pound the table, load the boats. All of a sudden got to 75. They're like, there's a gap at 65. I'm going to load the boat there. And it continues and continues. So I think that I agree with you. Like right now, it's not 2022, but it feels like 2022, if that makes sense. Where
I think the pain is real.
Yeah.
Although that one felt like it last. I mean, we're not necessarily done. Let's be very clear. A bounce does not mean we're done with selling. But 2022 felt like it went forever. I remember being in my car in November, driving to Thanksgiving and starting to watch some things fall. It was right around Thanksgiving of 2022. And I was watching my portfolio drop and it was like, okay, it's down a little. But it was like for the next, almost through the first quarter in March, nothing went up. It didn't go up for 5 months straight. It was like there was no bounce. There was no retribution. But then when it did turn, that's why I said the liquidations and the meltdowns happened much quicker now. If you look at Liberation Day, if you look at this one, if you look at DeepSeek, these things, they happen. The sell-offs are violent. The RSIs drop hard. The VIX goes up fast. And then the turns seem to happen much quicker. And I think this is about the information age, the data age. I also think it's the algorithms. I mean, this stuff has gotten so sophisticated now. I think, one of those meme guys on crypto had a great post yesterday. The one that had the fake girlfriend. He bought a girlfriend in a boat. I can't remember the guy's name, but he's a crypto meme guy. And he had actually a really good post where he was talking about the basically the liquidations and leverage being taken out of the market and how fast it's happening. And basically the stop loss is all being called on, Shy. And then all of a sudden, how at some point it's going to end, meaning all the leverage gets sucked out. All the stop losses get called out. And then all of a sudden it's going to turn. And, with Bitcoin, again, Please be clear. I'm not prognosticating we're at the end of this thing. I'm just saying that there will be a point where this bleeding, there's only so much leverage to suck out. And then these people are out. They are going to be out for now. And then you will see the rotation turn back to investing. But we took like $1 trillion out of the market.
I know. It's crazy. And I think that's why it's like so difficult to imagine like a multi-trillion-dollar assets like crypto can take the oxygen out of something that's 10 times bigger in the equity market. But it does feel like that's its correlation. Like I think there's people are confused.
Silver moves 30% a day.
Yeah.
Silver.
Yeah. Crazy. Like, structurally, something's I made this comment yesterday.
Right? People went super high leverage. They rotated in, went high leverage on the upside. They had to, right? There's no way you have a 30% move in a precious metal in a day without having something structural. It's not a coordinated like everyone woke up and was like, silver sucks now, I'm selling it. It's not what happened. And by the way, it's not what happened to Bitcoin. And it's not what happened to Robinhood. It was. And by the way, if I had to guess, Shay, like the cascade is like Bitcoin was an asset that they totally levered up against, right? They used it to buy stocks. And people that are in Bitcoin, what kind of stocks are they buying? They're buying high beta growth, right? These are the same people. They're all growth. They're what's the word I like to say? They're degenerate gamblers in the market, right? That's what we do. I'm kidding. But like they go high beta. And so, and then when they were trying to hedge themselves, they actually started taking dollars out of high beta and putting them into commodities and precious metals because that looked like the safe haven. And then when everything got crashed at once, think about how quickly the margin calls started coming. And what did they have to sell when the margin calls started coming? They start selling their growth assets that they were making, the ones they had profits. And it's just like boom, 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 until all of a sudden, like I said, until all the liquidity gets sucked out, we can't see it up. We can't see it move up.
Yeah, this is the confluence of investing as a growth investor these days. I think they're all connected in some way. And I think it's really important to look through the noise of this psychological fear that you're experiencing right now, because what we're clearly seeing in the market, in my opinion, is not a data-driven rejection of the AI demand curve is eroding in front of our eyes. Like that has proven time after time after time again, the cycle that we're still so freaking early in AI. Like we'll get into specific earnings later in the show, but we got clear signs from Palantir. We got clear signs from Google. Doesn't matter what the Amazon's price action is today, but like you got clear signs on AWS's growth. Like the market right now is just purely trying to
talk about that though, Shay. Give me your opinion. The $600+ billion from what, 4 companies? What does that say that the people that's watching this show might be wanting to think about what it means for AI, for the whole revolution, the build out?
Yeah, I mean, I think the correlation of that massive number is what's kind of driving some of the market fear now. And that's why investors are just kind of experiencing a PTSD a bit, like Cisco and telecom companies back in the early 2000s. I think the metaverse as well, in when Meta was burning billions of dollars of capital, the little to show for it. I think people are like worried about us overbuilding during the cycle, and the numbers just continue to incrementally get bigger and bigger and bigger. But it's really important to call out that there's a reason the Microsofts, the Googles, the Metas, the Amazons are investing this much CapEx, because you're seeing Microsoft alone just said the AI business is already larger than some of its historical franchises, and we're still only a couple years in. Google Gemini has hundreds of millions of users already, and then millions of paid enterprise seats. Meta is just wow. Like the Meta earnings were just I'm looking right now. Meta's down 3% today. I don't know why.
But it was up nicely yesterday when everything was getting crushed. So
yeah, and their core business engine is compounding in a way that makes their CapEx spend much less reckless than what the market's like providing the narrative for the stock price. Like they had their ad impressions grow 18 to 20%. They had their price per ads also increase like 5 to 8% as well, which means that somehow Meta is growing both the volume of ads shown and the price advertisers are willing to pay at the same time. That combination is so rare and totally just highlights how much of a productivity tool AI is into these massive ecosystems. And I think that if you have a long-term time horizon, this pullback is not AI driven. It's due to all the macro noise, whether it's crypto, whether it's something happening in the Middle East, whether it's the wrong Fed chair, whether it's midterm fudgery, whatever the reason is for this pullback, it is not AI driven. And I think it's really important to realize that, because that's where opportunities are formed, where this massive investment AI arms race we're experiencing right now, it's not going to be a permanent thing. Eventually, you're going to see that it's going to even out. Like, let's just say 2028 is my base case, where I think maybe the supply and demand is going to start evening out a bit. I stole it from TSM CEO when he mentioned that. He thinks that's the timeline, and they're the most responsible adult of the whole AI economy. Cloud growth right now has been clearly constrained by supply rather than demand. That's all we heard across the board. So as inference demand continues to grow every time a new AI agent or product goes into the production, the fear, all this fear about depreciation, GPU depreciation, like it's overspending, like it's going to decay way faster than people anticipate. Well, revenue is going to be growing a lot quicker than people anticipate as well for these platforms. You just saw Google at that scale produce 48% revenue growth is bonkers.
48 against a 35% estimate.
Insane. I have a question for you though as well. All right, I sold some Amazon today. Trimmed some Amazon. Not in lieu of a bad report. I just think there's better alpha elsewhere right now through the carnage.
Telling our best ideas. That's great.
Yeah.
Great start.
But
great start of the year.
No, but my thing with AWS is I'm wondering if I'm viewing it in the lens of Google Cloud, because they have similar backlogs. 240 bill, 250 bill. Google Cloud has
not a lot of OpenAI, by the way.
Which is great. Which is everything. But Google has half the revenue base as AWS does, but they have a similar backlog. So I'm like, I don't know if I'm viewing that on like pro Google, and that's why I'm like not as bullish on AWS. But like, what's your take on that? Because that's what's shocking me a bit.
Well, I love Google. I mean, I was pounding the table for the longest time about that one. I mean, I do think it's more appropriately valued now. Like, I think there's upside, but it's like it's not what it was. Super asymmetric a year ago. Like super asymmetric. The risk was all like regulatory, like, was Google search going to get destroyed? I knew none of that was going to happen. So that's like when you don't, like, it's like you don't understand a moat. I'm much more afraid for the SaaS companies, by the way, than I am for Google by a disruption from something new. And we'll talk about that later. We'll talk about why I feel that way. But so here's the thing. I mean, I was on Yahoo Finance yesterday. I actually talked about Amazon and Fox Business too. Is like, they are still recovering from a bad start. Like, you cannot make up for a start that was as bad in AI as it had. First of all, this was a little bit of the histrionics of Amazon. Like, it didn't believe in hybrid and multi-cloud. It would not acknowledge multi-cloud's existence for a period of time. That hurt it. It's got sort of its really rigid way of doing things. I saw some very funny posts about kind of like how the company makes decisions, and their 6-page memos, and like, some of the things that really helped it, I think, early on have made it very bureaucratic and slow. They wanted to build their own infrastructure. They wanted to be Google early in the AI trade with Trainium, but it wasn't ready.
Yeah,
it wasn't as far along. And so Adam Selipsky, and I said this on air, is like, I think he lost his job because he underinvested in NVIDIA. Like, you remember when you saw the actual amount of NVIDIA spend from the different clouds, and Microsoft was like, Google was spending as much as Amazon. But from a way smaller size base. Their cloud business was way smaller, but they invested, and by the way, still had the TPU business. Amazon tried to lead before it was ready with its own infrastructure.
Yeah.
And that really hurt it. And now, what did it stand up, like 4 gigawatts this year, and like almost like a full gigawatt in the last quarter or more than that. But like, they're now adding capacity, but they had to add capacity. So it's like they could only take so much backlog on. They can only sell so much of what they don't have and only promise so much. So I think their numbers are pretty right for what their CapEx investment has been. And I also think that's why they're ramping. Because what they do have that's a huge benefit for them is that they're building from a base that's substantially larger.
Yeah.
And you're talking about $150 billion revenue or so, like in that range, business that they have not necessarily converted all those historic CPU era cloud companies to full-on AI customers. Some of them they've lost, some of them are multi-clouding, some of them are still going to be looking for more capacity. So I think Andy Jassy said yesterday, but every bit of capacity that they're bringing online is quickly converting to revenue. There is no lag. This isn't like internet bubble issue. Like as soon as they can bring compute up, they're selling. But one of the things I did see that someone smarter than me shared with me was that I think they've spent $500 billion in capex over the last, is it 5 years or something like that? And they've only driven a 5% return on capital. And I think that's probably some of what the market has been a little spooked by. Because remember though, and by the way, this isn't, the 5% of capital is on the whole business. And the problem is that the AWS business funds the commerce business. The commerce business is massive and it's sticky, but it's not that profitable.
AWS is it's less than 20% of the whole business, guys. Like that's what we're talking about. It's a hidden gem, but it's still a minority.
But it drives all the op-inc. It drives like all the op-inc. I mean, fortunately, they've got a really nicely growing ad business that's also very profitable.
Yeah.
But like the core business isn't that. And so I think people are looking for pure or more pure. Like if you look at a Google, like it's just more pure. Like every part of the Google stack is super profitable.
Yeah.
And so, and obviously for a long time, cloud wasn't profitable, but they've turned that corner now. And of course, they've got the cash machine that is the advertising business.
Yeah.
So, you know, I still like Amazon. I still like it, but I think I'm liking it, Shay, through the lens of being longer term, because I do think that Amazon's one of the biggest beneficiaries of AI long term and for itself. And I think that's part that's probably being underestimated is how much profit could be brought back into the business through AI, through its advertising, through its commerce business, through robotics, autonomy, drones, all the things that AI can do for that company over time to bring op-inc is super exciting.
No, I agree with you. It's time horizon. I think it's just opportunity cost. Like right now, the reason that what drove my decision is there's a carnage that's happening in growth plan. I was like, I don't want to have this. I have no cash as well. I had to raise cash to buy this carnage because I think it's so over the top in AI infrastructure on these like growth names of them getting penalized. That was like, I love Amazon still long term. I think that their chip business is severely under discussed. Like nobody talks about their Graviton business. Their CPU business is incredible. Some might say better than x86. But I just think that right now, the question a lot of these investors are asking is like, do I want to hold the stock for what looks like an investment year, which I think rightfully so they should be because they continue paying for the 2-year-old mistake they did early on. But right now, it's been one of my most frustrating holds because I'm getting dual exposure by being an Amazon shareholder, AI infrastructure and robotics. Now, and sprinkle in the ad business that's worth $500 billion, give and take. It's an $85 billion run rate, 35% margins, growing 23%. Like that alone, in my opinion, is a half $500 billion market business alone. AWS was wow. Like that's 24% growth at that scale. And that's not really including all the open AI business that's going to be coming down the pipe. Like I do think that they're going to have a 25% growth year, AWS. And that's going to be really, really strong for reacceleration story going from 20 to 25%. It's really tough for me to sell. I was really off sides with this pullback in the market, and I did not have the cash cushion I needed to add to, I don't know. I'm looking at the list right now. I think it's crazy to me that AI securities has been pulling back the way it has. Like we'll get into software right now. It's a great transition to software, but we agree that most of software will become a commodity. Like that is something you and I agree with. They're going to become a basic inputs into some kind of larger ecosystem. Cybersecurity is not going to be that. System of record players will not be that. But they're all being lumped into the same lazy bucket of sentence first, ask questions later. So that's why the CrowdStrikes, the Rubrics, Palantir, like Palantir had I'm trying to think about the more impressive earnings report than what Palantir has produced this week. I can't think one at top of mind. Maybe it was NVIDIA early 2023 where it just shocked everyone. with even higher bar of expectation. But like there's so much opportunity right now in 40 to 50% drawdown that I kind of want to be more risk on, where in the past 6 months, I've been allocating a lot of money to the Metas, the Amazons, the Mercado Libres, because it was somewhat of a fair, maybe undervalued valuation when all the other risk on growth names were just really, really expensive. But now it's becoming way less expensive. And these other companies, like, they're going to be just fine, but they're going to be slow movers. But question for you, though, I want to hear your take on software, because it feels like this is just like worse than 2022 right now for the whole space. Like, the pullback is way more severe and it feels more permanent week after week. Like, what's your take right now on that?
Yeah, I mean, I think Anthropic is the absolute, buzzkill. It's amazing. The technology is so good. I mean, OpenAI is trying to kind of do some of its own copy versions of this, and by the way, I'm starting with the provocative here, but like, if you haven't played with this stuff, you have to play with it, because I think people are seeing what can be done. I went on CNBC and I was talking about this with Kelly Evans, and like, it's not that AI will eat all software, but AI will eat some software. And it's a lot of vertical and specific use case SaaS where there isn't data underneath it, like core business intelligence. So whether that's ERP and CRM, like, that has a lot of customer or operational data. Like, there's a lot of CRMs created for like project management. There's no data. There's nothing proprietary about it. You're seeing people go in and use Claude Code and literally build an app that looks like Monday. I saw one of CNBC anchors, Debo, said she actually did this and shared it, and it looked just like Monday. And she built it in Claude Code in like a few hours or less, in like minutes in the morning, and it works. And the point is like, the baby's getting thrown out with the bathwater, because like, I think there's core CRMs that are very hard to rip out. I think there's core ERPs that are going to be very difficult, but I think the re-rating is real. And the re-rating is, when Satya Nadella got on air and he said that basically SaaS in the AI era, they're basically going to be deprecated CRUD databases, because that's all SaaS is a CRUD database with logic on top of it, right? And so the point is there's the databases that will still be proprietary, and the value add used to be the semantic layer, that this is where you would go to operate. The semantic layer is going to look and feel a lot more like Claude or ChatGPT or Gemini or something like that. It's going to be interactive. It's going to be, you're going to talk to it. You're going to speak to it. The data that it's going to use is going to be a combination, some collaboration that exists between Anthropic. Like, you saw Anthropic did a deal with ServiceNow. OpenAI did a deal with Salesforce. Like, the deals exist because OpenAI is not exposed to that core data. So for OpenAI to be useful on top of that core business intelligence and logic, it needs access. So OpenAI is going to be more likely that semantic layer or Anthropic. But the data that these companies have, and by the way, the rules and the rails. So I call it the rules and the rails of software is pervasive compliance, pervasive governance, continuous updating, meaning the stuff always works. And the trust and security layer, that all those things are taken care of. So you're not going to build that yourself. You want the SaaS company to keep building that, but you want the semantic layer that feels like Anthropic. You don't want to know how to go into Salesforce and pull out the report. You just want to ask it a question. So, and then on top of that, the only thing I'll add is then you don't want to actually have to do this with each app. So you want that universal semantic layer that can then look across your supply chain. It can look across your workflows. It can look across your HR. It can look across your CRM. It's able to see them all and be able to give you real-time collaboration. The agents become your collaborators. And so the problem is none of the business logic software works across that way. And so I think that's where these partnerships become really important.
Yeah, and I also think that great points. So some color I want to add to that is the additional competition that all of a sudden got created over what feels like overnight, but it's been years in the making. Where since the cloud era, SaaS was like one of the best areas to invest in because it had a massive tailwind that was somewhat unfair because cloud adoption was this tide that lifted an entire category, aka SaaS, and the market rewarded that growth with forgiving the traditional rules that these publicly traded companies have to live by, which is actual GAAP profitability, which was forgiveness that masked weak moats because they don't really traditionally own the data. A lot of these are wrappers around data. Now, IT budgets have been extremely bloated. I think that in the post ChatGPT era, a lot of these CTOs were asked by the board or whoever their bosses were of like, what are you doing to capitalize on AI? And that caused a lot of these CTOs and IT budgets to kind of balloon up a bit because they had to kind of show that they are actively trying to install AI into their organization through R&D, whatever it might be. But we are in that deep bloating phase a bit. We're in the GLP-1 enterprise AI phase a bit right now, where the opposite environment's happening. You're going to be seeing a lot of companies building incremental features that are cheaper than ever due to all these AI native customers like Claude, OpenAI. Nobody talks really about Perplexity, but there's just so many frontier AI models and AI native companies nowadays that VCs have funded millions of dollars, billions of dollars into that AI can now generate products faster than ever. And the supply of software now explodes because of that. So now pricing compresses due to purely on the supply and demand issue, economics 101, there's just a lot more competition these days. So the differentiation now starts to move away from who has the most features towards who owns the, like you mentioned, the data loop, the distribution, the enforcement points. So I think that the buyer psychology has clearly shifted, rightfully so. And that's why the business model is getting repriced in real time in front of our eyes, because big enterprises are being armed with these hyperscaler bundles with a ton of open source framework and this internal tooling that can let them source parts of the stack that gives 70% of what a Monday provides or what a Braze provides. Like all these tier two.
Be super clear, man. Just be super clear. Like NVIDIA trades at 20 something times growth. Like Google and Amazon are sub 30. Like some of these companies are like 50, 60 times. Like, welcome to the jungle. I mean, like that kind of multiple is only enjoyed when you're seen as having no meaningful disruption or competition.
Yeah.
And so, we can talk about Palantir, but it's still enjoying quite a multiple, even at this price. But like the others, like, aren't they? I mean, I haven't looked at the exact, but aren't they settling in the 20s and 30s?
Let me see.
I think what's happening.
ServiceNow is the best reference for me because they're a blue chip. Nobody should be paying a premium in a different software company in that whole space higher than ServiceNow because they have a Rule of 40 score of 55, 55, and they're trading right now at 19 times free cash flow. So let's ignore free cash flow because of SBC. 25 times earnings.
Okay.
So
25 times previous or forward?
Forward.
Yeah. So I mean the re-rating's real. So where does it go back to? I mean, the highest premium, best companies on the planet, not named Palantir and Tesla, enjoy about 30, where they start to get, generally speaking, is where they start to get friction. Am I wrong? I mean,
no, you're right. I'm trying to think about another comp, but yeah, I mean, that's the issue. Snowflake's a good example. Snowflake, the stock has significantly pulled back as well, but even at this 165, like it's trading at 38 times free cash flow, and that is excluding their heavy SBC. And I think that we're entering this period where GAAP profitability matters a lot more in software. You actually, you don't have the luxury of ignoring what the market has always told companies. Like you actually have to produce real earnings. Software, like I mentioned, like they were forgiven because the business model was just chef's kiss. It was it's very difficult to have 80% plus gross margins growing at the rate they have with predictable recurring revenue. Like it was just a crazy business model. That business model is getting repriced. So now you don't have that luxury of just like producing heavy losses and taking SBC out. I think Atlassian is the perfect example of that because yesterday I truly was I dropped my jaw a bit on their earnings results. I'm trying to pull up right now. All right. Their estimates for the earnings were supposed to be $1.2 billion. They came in at $1.6 billion. 25 to 30% beats. EPS adjusted 0.73 cents. They came in at $1.22. That's nearly a double. The stock was fading hard. Let's see what they are right now. They're still red, even in the bounce back that we've seen in the market today. I think it's because they are one of the biggest SBC losers in the whole market, and they're being penalized for that because you can't just rely. You just can't live in that old framework anymore. So Atlassian, to be honest, is the perfect proof point of the vibe right now in software, and that is somewhat worrisome as a Snowflake shareholder.
What is Atlassian's moat? How do they stay sticky?
Sure.
How do they not get disrupted by like what? I understand enterprise sort of slow moving resistance to, but like, how do they not get taken out by a company that builds something and does the governance, but it's kind of pure AI native and done in a different business model, than seat based?
That's something they also haven't innovated in past like 5+ years. Like, I think you're right. It's mindshare. Mindshare might be their moat, but even then, from developers and like people who actually use their tool, like they're more they're more affluent to learn these AI native tools and create something similar. Like you mentioned, like the anchor at the show you're at, she just created a project management tool, what felt like overnight, and that was good enough for her maybe not to pay up for a license on Monday.com. Same thing can happen for Atlassian. That is what's happening at Atlassian. Like I'm seeing their Atlassian's multiple actually, because I'm guaranteed.
But the thing is I think this is where there's the reality and then what's possible and how the market looks forward. Because the reality is in the numbers, Shy, this hasn't happened. People haven't moved away. They haven't built their own tools. They're not stopping using these other companies yet. The market just genuinely doesn't believe that won't happen at some point in the future. That's what you're seeing in the price.
Yeah. And that they could be offsides and too over the top with that. Like we could be so over the top with AI, then also be so punishable on AI. I think we're at the bear phase.
People out there though, you got to use this stuff. It's incredible because we have our own AI platform. We're building decision intelligence sitting on top of all these tools, and our moat is our data. Like we don't think our moat is the interface of the platform. The moat is the data. And then on top of that, it's the intelligence in the platform is unique and unavailable to Anthropic can't see what we see unless we let it. And then you put it into a sandbox that it can't be seen by public. Point is everybody's got to find a new moat. And the other thing I think that's, one other thing about software is just the re-rating on the new business model. Like the hyperscalers have sort of rebuilt their business models to consumption in most cases. Like Google and their cloud, like it's all consumption based. You pay for what you use. The software companies you pay every month for a user, whether they use it or not. And that's going to be different. Like, I don't think Salesforce goes away, but I think Salesforce is trying to move to a consumption model, and people don't quite know how that works out. How much are they going to use the platform? And what does that equate to in terms of a user that might be $500 a month per user, say? Are they going to use more than $500 worth of consumption of the platform?
Well, that's why they got into that security play. They acquired that company. I think that's their trying to. It was a very much away from their traditional business routes, and that maybe can accelerate.
You're talking ServiceNow, right?
Yeah, ServiceNow. I forgot what the cybersecurity company what they acquired was called.
Yeah, I talked to them about that. I'm trying to remember too. But yeah, I was talking about Salesforce. That's why I'm just confused.
Oh, sorry. I heard
same thing.
Salesforce. First off, Bill is in my opinion, is a much better CEO. He knows the reality of the environment.
Armis.
Yes, Armis. I lost complete trust in Salesforce with Mark Benioff, the way he's just been acting the past, honestly, post-COVID. I get their strategy in the cloud era. They did a great job acquiring BI tools to sell that platform narrative. I think that they've had multiple failed acquisitions since then, and they just don't have the right leader on board. Especially with, I don't know, he feels a lot more not emotional, but just like I get a lot of Sam Altman vibes from him.
Well, I think what's, the personality has been to have a bit more of a public firefight, like Sam reacting to the advertisement by Anthropic was just like, you don't do that. You're the biggest. You ignore it. People don't shit talk down. They shit talk up. That's the thing. So when people are shit talking and you react, you're basically giving a voice to someone that has no voice, should have no voice. And so the net of it is like, Anthropic's been super disruptive and they're really doing well, but Sam should continue to lean in. We're the biggest. We are the biggest in terms of users. We are going to continue to innovate. We have the biggest valuation by a lot. We're going to be $1 trillion IPO. You just put your head down. You don't react. And I think some of that, like, with Salesforce sort of picking fights in public with Microsoft and all, I just think that, it's like I said, it's one or two things. Like, Elon does this too. Like some CEOs do this, but it is definitely a thing of taste. So some people do not like that look, and it will hurt. Bill's much more polished. He doesn't react to things. But again, it's kind of like Vlad and Anthony Noto. I mean, Vlad's out there. He says stuff. He's reactive. He's emotional. And people love him for it. And like, as a SoFi guy, like I want Noto to do more. But Noto's like, he's a polished guy. He's just not going to do it. He's not going to come out and defend his decisions. He'll let the numbers speak. So there is a lot of that. But it's like, CEOs, as long as he doesn't end up on the Epstein list, I mean, then I have a problem. That's going to be uncomfortable.
We were at the part of this pullback where people were actually trying to connect the dots, and the Epstein list is the reason there's such a massive pullback in the tech market. That was how desperate a lot of people were at a point to like look for the answers.
Well, it did distract a lot of the media.
It did. It totally did.
So like, especially the business media, like, I mean, I did so much TV this week. I mean, I'm bruised. I'm battered. I feel like, a gladiator right before he falls dead in the middle of the arena after he, fought with the wound. He just drops dead. Like, that's how I felt the last couple of weeks.
I know. The amount of times I had to respond to AI bubble. Are we in one? Are we in one? It was nauseating, but it was difficult because I kept like trying to put my finger in the air of what was causing this pullback because it wasn't AI. And I do think that there were some crazy opportunities like SoFi. Like SoFi had an incredible earnings report. They gave a soft multi-year guide of how much membership growth they're going to experience. They were in the teens, like they were in the high teens. That was like crazy to me. I'm even after this bounce, like I'm down 18% on my position. I think it's still a $50+ stock if that guide holds. And Noto's an operator. I don't think they would communicate a guidance like that if that wasn't somewhat the floor of it. It could be higher. So it was a very crazy time last afternoon. You and I were talking on the phone, and it was just like it felt capitulatory a bit in certain pockets of the market after hours, where it was just someone blew up on Bitcoin. It went to, I don't know if it broke 60K, but it was just like it went from 70 to 60K in a blink of an eye. It was kind of crazy. But right now I'm seeing the market. I'm glad it's bouncing. It's still below the level that I need to trade above, in my opinion. 606 on Qs is where we need to close above in order to us to maintain our trend we experienced for the past year. That needs a hold. But I love the breadth widening a bit. And I think that a lot of people like can fine. You can have heartburn on the max 7 CapEx spend. Don't ignore that $600 billion of money that's being spent this year is going to go towards components of these data centers. A lot of people don't realize, like, you can maybe not like the players who are spending these billions of dollars, but why not the memory component, the power and cooling components, the connectivity component? Like Broadcom was the biggest winner this week. Also Ster Labs, Credo, like these like AI highway or AI networking names, they're going to benefit just maybe not just as much as memory, because memory has a pricing power due to the scarcity of it. But like there's no world where those names should have been read after what we just heard from the big four names. It did not make sense at all. And they're leading today. Like I'm seeing Astera Labs is up 13%. Nvidia is up 6%. Let's see what Broadcom's at.
Broadcom, by the way, was up yesterday though. Like it was another one of those names.
Oh, was it?
Yeah.
Oh, yeah. ARM's up 10%. Nice.
Yeah.
Wow.
I actually talked to the CEO of ARM. Like they're moving and shaking. Like they're another big beneficiary. And by the way, on our beneficiary list, I've had a couple call outs on X. Like we put some names that maybe weren't obvious. We forgot some of the obvious names, like that the 600 billion capex probably is a good thing for NVIDIA. It's probably a good thing for AMD on the list of things we're going to cover. I think maybe we just, those are so obvious and everybody
so obvious.
Yeah. But sometimes I guess, people's feelings get hurt. So we want you to know, and I think I've been more than public on media and TV and other places about this. Like we still feel very bullish and optimistic about the prospects of NVIDIA. And by the way, AMD had a pretty good print too. I think they're too conservative at times. Like I know the market hates that Lisa Su isn't more like Jensen and like how much AI she's going to sell. She kind of talks around it, but doesn't say like, this is how much Instinct and Helios we're going to ship next year. But they had a good print too, but they also had run up quite a bit. And that's one of those ones that like, when you start to see the air come out of the balloon, the ones that have had the big runs tend to get like Robinhood. I mean, you just get crushed because like people thought they might be overvalued to begin with or a little overpriced.
Yeah. I mean, AMD, I think I made a post about this as well. People were just, I'm a big AMD bull. I think we both are. We fully don't believe AI accelerator market's going to be zero sum. The second source is going to be a massive opportunity for AMD, which is why they're going to triple the revenue growth over the next 4 years. But I think, again, the most important part of AMD's earnings, in my eyes, was that the data center business is no longer just growing, but it's accelerating again. That was a huge bump. But this is going to be a second half 2026 story. Like this is all about whether or not Helios, like they're going full systems route, which I think they should be going. And that's all Helios. And that's going to be produced in 6 months minimum. And when they're trading at a premium valuation, I think it was like 40 times earnings compared to NVIDIA, which is 28 times earnings. I think that nobody really wants to own opportunity cost. Like they don't want to hold the bag and wait for an opportunity anymore. They're becoming very impatient. And I think that's why it sold off. Doesn't mean it deserved to sell off 20% one day. That was crazy to me because we only got more evidence that their story is getting stronger and stronger. But I just think NVIDIA has not moved in a year for stock at all. They're just continuing to print cash quarter after quarter. So I think there is a world where like AMD had its moment. Now it's digesting a bit until we see what happens at Helios. Maybe it's NVIDIA's time to finally break out and shine because that 600 bill.
Talk about a name that like stable, like performance. I started the conversation with this, Shay. Like I want to own things that I know will perform from a business standpoint.
Yeah.
And I mean, there are companies you can just be in companies that are cool and they perform and never go up. And you got to sometimes just know when to get out, like PayPal. Like I actually think that Enrique Lora has left one of the hardest jobs at HP for an even harder job at PayPal. Like I cannot imagine trying to, by the way, I sold puts this week, $40.35 spreads on PayPal for mid-year, collected a nice premium. I don't really want to own the stock, but it's like, if it goes to 40, I'll buy it. I'll hold it for a while. But like there is like, that is going to be such a hard job. But most companies, like if they're growing, if they're executing, if they're profitable and they're in their particular industry, they are, a leader, a driver of whatever that is. These kind of drawdowns end up being temporary pullbacks before meeting future new highs. And so my point is like, people made a ton of money on NVIDIA for like a decade. There was a year it didn't do a lot, but I mean, you look at a lot of companies that people have made money on, that's the history of it. Like there are some years it doesn't do anything. And I think those are probably good accumulation periods. Like that's when you should be buying it. And people just are so impatient because they want the immediate return that they're only going to buy stuff if they think it's going to go up tomorrow. I'm not an advisor. I'm not giving advice. I don't, I'm talking about what I do, but I buy things that I think are good companies that have upside for growth, that are in sectors that I believe in. And I invest in companies very personally, like I own them, like I operate them, like I care about the business and I pay attention to them. It's not, so like when I'm saying I'm excited about something, I'm not like, oh, Cypher, it's going to the energy trade has not changed. Like we don't have enough energy to fuel the data centers of the future. Like I don't care. Like I've said publicly, like I worry about Iron because they were getting into parts of the business that I don't know that they understand as well as other companies do with the actual deployment of compute capacity. But like Cypher is a pure energy capacity build out play. We don't have enough of this. Like at some point, the economics are going to make sense. And that's why I'm in it. But I wasn't in it for the quick win. I would have sold it in the 20s if I was. I'm in it for the ride up into the 40s, 50s, and beyond if they execute. And so I just think a lot of people, they conflate like, oh, how's that trade? It's like I bought it 3 months ago. I have no intention of selling it for the next 3 years. Go touch grass, go eat shit. I don't care. But like, I am not here to buy something to I'm not making my money here. Like I operate businesses and companies. I pay my bills from that. I invest in companies with the long-term in mind. That is how I think about these. So if you're ever listening to me, and please do not buy anything I say on my word. If you're ever listening to me and you decide to do your research and buy something, just know I'm not buying with a week, month, and in most cases, even a year horizon. Like I'm buying things to hold for a long time because I believe in these companies. And I only sell them when I no longer believe.
Yeah.
Like I sold DraftKings when Polymarket came out. Like I just realized that the sports betting thing was not like, I always believed in the degeneracy of the human condition. Like people are going to gamble and bet, but I realized that there was a better moat being built.
Yeah.
Anyway, that's a rant. It's my rant for the day. Dan's rant.
No, I mean, it's a good one. I think that nothing changed in the past month where the world needs more data centers and compute is the new moats or the oxygen of the new economy. So those two things are still the same. And before we continue, I do want to say we're going to have the last 5 to 10 minutes is going to be a Q&A. So put your questions down in the comments and we'll get to as many as we can. The AI utility trade was very tough. I think it's impatience was definitely a big part of the pullback in those names. I also think that there's going to be a lot of noise in data centers. I think it's because of Sam Altman. Like I think that you're seeing like crazy as a set, like Oracle broke 140 yesterday. That's like crazy. They're in the 130s yesterday.
When I recommended Oracle was when it was 70. That was when I actually said it was a great buy.
Yeah.
But so I'm saying is like it's 100% up, even though it's down 50% from its high. Like
totally.
Horizon matters.
100%. And I think this environment right now, in this pullback, there are going to be some insane opportunities. I think in a couple of years, you just don't know what those opportunities are actually going to be, but there's going to be like, whoa, what do you mean you got into this? Like you got Iron in the 30s, you got Nebius in the 60s, you got Cypher in the low teens. Like there's going to be so many opportunities of like,
go ahead. Sorry.
No, if there's a lot, I'm blanking on my thought, but we have some questions coming in. Do you want to say
before we go to questions? Just one comment. I want both of us to share, but I want to hear you first. What's your strategy these days when things look like this? Like, what do you do? Do you sit tight? I know you said you did some trimming and deploy. Like, what is like the kind of Shay's playbook when VIX spikes, panics high, when it feels like everything's going to zero? What is the Shay strategy?
I mean, I'm a shark. I add when there's blood in the water. I love adding. Like discomfort is what provides me compounding opportunities down the line. It's always proven the case the past couple of years, especially when the underlying thesis has not changed. The demand curve for AI has not cracked. What about you?
Yeah, I mean, I'm an options guy. Like I said, I use options. I play volatility. So when things are rising really fast, I'll sell cover calls on positions or parts of my positions for income, knowing that I have an exit, a target for something I really love, but knowing that, hey, if it hits this, I will sell it kind of thing. Like I 3X it. And I sell a lot of put spreads and I use a lot of distant, like 6 months plus out. And I use it at prices that I feel would be ridiculous, even in a giant drawdown. Like if I could buy this at this price, I would be super happy. So like, for instance, Robinhood, it was at 80, it was down at 70. I did 40, 35 put spreads for like middle of the year. SoFi, I was writing 13 spreads, like little spreads, like well below the current price, when it dropped below 20 for like June, July period of time. And I was collecting premium. And I'm basically, my mental place when I'm doing these is like that. I think it's about 80% chance it doesn't touch, but I always keep in my mind that there's a possibility it goes to these levels. And then the question I ask myself is, do I want to own this company if it does drop to this level at this price? And, the bottom line is these are prices where I think they're, and by the way, my SoFi position, which is well into the 6-figure share count, I accumulated most of that during the downturn in 22 because I kept writing options. I did this strategy and it kept going lower, but like I amassed a massive position in the single digits because I basically believed in the business, the company, the model, and I kept writing options as it went down. I kept getting the stock put to me. And like, I wouldn't have the share count I have if I hadn't done this strategy. So a lot of times my accumulation happens because, I find new buying levels and I use options to basically dictate the buying level. Instead of just buying at market, I wait till because it's basically, okay, if it does go down further, instead of buying at the market today, I'll buy it at this level in the future. If not, I collect premiums, and I've made a lot of profits on collecting premiums over the years. But I've definitely got some wrong. So options are at your risk. Do your research. Learn how to do options. You're going to play with margin when you do options. Most people do. Very rarely. They won't even let you do it on cash secured in most cases. But it is a great way to make money. And then, by the way, when things are rising really fast, you can kill it selling cover calls and positions. All right, you want to do some Q&A?
Yeah, let's do some Q&A. First one I see, or if I want to own one, ... which is the best long-term pick? Iron, Nebius, Cypher, CoreWeave. I'll give my input on this and I'll pass it to Daniel. I think CoreWeave is an untouchable asset, especially with the
untouchable. Don't buy it.
I would never even go near it just because I don't think Sam Altman's going to fulfill the $1.4 trillion of spend, and I think he's going to go through the order of like making sure who gets paid. CoreWeave is last in line in that order, so I just don't think that they're maybe Nvidia will fund them out, but I just think in order. I love Nebius because I think they're much more than just GPU REITs. They have a lot of other business sum of parts. I would then go Iron. Riskiest part is Iron because they're trying to become a Nebius and Cypher, a landlord and also an AI utility player. And Cypher has the highest floor, lowest ceiling. I think that's probably the safest among this whole group. Your take?
Based on my actual own position, Cypher. It's the one I have the biggest position in. I really like it at these levels. I'm tinkering and adding. I have such a big position. It's maybe 10% above my buying where I bought it at. But I agree with you on Nebius. CoreWeave just has questions to answer that I'm just waiting for it to answer is how does it keep growing when it's basically its model is debt at the money and depreciation and consistently using it to kind of create this. It feels to me like the one that has the most risk when the music stops. But it also is a bit hypocritical of us because we don't really believe the music's going to stop in terms of the demand for capacity. So they do have a chance if the build out happens like it is and it keeps going, they could get really big. But they just have the risk profile. So if you want to look at this with upside and asymmetric upside to risk, I definitely like I'm still Cypher, but Nebius is next. And I mentioned what my concern with Iron. I think Iron will do fine, but what Nebius does is unique. And there's a skill set. And like I said, can the Iron team do it? Sure, they might, but they haven't done it yet. So there's something to be seen there.
Yeah, they had the perfect chance to announce some kind of major deal yesterday, Iron, and it was so vague, which is not the best sign.
I love the Tyler post though, Cypher, where he's covered in oil. You see that one where he's got the
I did
with the oil.
He's a great CEO. All right, next one. Do you see this as another V-shaped rebound in growth or a U-shape? That's a good question. I think it's a V-shape if we again close above 606 and we go up to the right, and this was really just a crypto pullback and crypto recovers. But I don't know if crypto's going to recover because I think some firms blew out this week based on the volume and structural damage that we've experienced across so many different assets felt character changing than what it's been like. because in previous pullbacks we've had black swans. The carrier trade crisis, there was a reason. Terraforce is the reason. This felt like a structural unwind with no pinpoint specific reason. That's character changing, so it might be a U-shape, in my opinion.
Oof. You actually said both. So which is it?
We'll find out. Check in every single week to find out.
All right. No commitment. I think it's a check mark. Actually, a reverse check mark though, like where I think you're going to get about a half a V, and I could see it swimming sideways for a little while people wait for clarity on Warsh. They wait for some clarity on the Bitcoin strategic sort of framework. They're waiting. I do think one thing that could cause a full V shape or a true check mark where you actually see up and beyond is if the government comes out that they basically filled the Bitcoin reserve on this dip.
That would be so bullish. Oh my God.
Because that's the one thing I keep asking is like when, we've talked about setting up this reserve is where do they enter? And I've heard some rumblings that they wanted to unwind and get in at a better level. And so, even like President Trump's whole Intel fail thing and then buying an Intel a week later, is it a good time? And by the way, President Trump's been really quiet through this whole carnage. And typically he's not. So it's like, what's happening here? So, I'm not a conspiracy guy, but hey. So if there's an announcement, by the way, did you see that Bessent came out? I just responded to this, but Bessent came out today and said, crypto revolution is here.
Oh.
Yeah, so that hit this morning. I saw it on Watcher Guru at 9:48. And my point is like the question, and then I retweeted it and I said, so did USA buy the dip for its BTC reserve? So, the question is like, if something like that happens, I think it could be a real quick rip. Because like I said, there's no sign. And actually, by the way, subtly, Shy, underneath all this chaos is I think the bubble talk has sort of started to slow. I think people are seeing what Anthropic's doing. They're seeing what these agents are doing. They're seeing how powerful the collaboration with AI is. And now it went from AI is going to destroy and eat everything. And what I'm saying is like we suddenly realize like AI is actually really powerful and going to work. The question now is like, oh my God, how many structural businesses might it fuck up? Like how much of the other side of it is so productive that, oh my God, it is actually unwinding parts of the economy. Like, you know what I mean? Like, so the 200 billion, the 180 billion, the 105 billion, like of these, like they're spending because it is the moat. It is their moat to be able to continue to compete and maintain their markets in the futures. They need to keep spending. So I just think it's kind of interesting some of the things that have happened outside this, but I think the crypto unwind is real. I think we're going to get this kind of reverse check mark where we get a nice little bounce up. But I think without some of that certainty or without some sort of catalyst, it actually really changes. There's still midterms. There's still a new Fed chair. We still have some, affordability issues in the country, question marks, and we still don't quite know what the real carnage of AI is to all the other businesses and industries. And I think without that clarity, we might have a hard time seeing anything rip beyond new highs. But of course, parts of the supply chain that are super constrained, like memory and like capacity for energy and stuff like that. Like I could see some of those continuing to break above now because we're seeing the spending pattern. We've gotten confirmation that spending is going to happen, and those companies are going to have really good earnings and really asymmetric pricing power.
No, you said it perfectly. I think if we get clarity on what just happened, I think we'd be shape. Like structural demand for AI demand curve did not change at all. All right, one last question. Let's see which one. Top 5 buys right now. That's a good one.
5. Good God.
Let's give one idea each. For me, right. I can go first. I think that the Cloud 4.5, like that was the first time since the reasoning model creation, since ChatGPT was like, wow, this is a ChatGPT moment for AI. This is the third application of like, whoa. So now I'm looking for the biggest beneficiaries of agentic AI as a picks and shovels play. DigitalOcean, ticker DOCN, like that has been my favorite, one of my favorite picks and shovels because they are perfectly positioned for inference. Were considered AWS Lite's business model, but that's not the framing that you should view this as in the agentic AI world because They have the millions of developers that use them. They have the good enough product, and they already positioned perfectly with data centers for that AI agent. So like I think just them being green yesterday during that carnage was indicative of people don't want to sell that right now because there was an inflection point that happened, and they're growing 20% top line, 35% EBITDA margins, and they're trading at 20 times EBITDA multiple. And that was before the Claudebot moment. So that's my name. Yep.
Oh, yeah. I mean, let's think what I I've said this, like, there's a few things I really like that we companies we advise as analysts, so we don't own. I think I've had enough conversations now with CEOs to realize this memory thing is an incredible moment. I pounded the table on Micron for multiple years. Memory is only going to get more powerful. It's only going to get more asymmetric. It's only going to have margin expansion, and there's no optionality. So I think I absolutely love the idea of being in that space, and I like Micron more than like SanDisk and others. So I'll give you that one, and then I'll just share what I am buying since you shared yours. I bought, okay, two of these everyone will agree with probably being good buys. One's super risky. I bought Robinhood, and I also did options on it. I bought SoFi, did options on it. I bought HIMS. And,
whoa.
Yeah, and a lot of people don't like it, but I actually think the reason Novo and everyone's going after them is because what they're doing is really disruptive. And I think that, when you start to see all the pressure and you see these companies reacting to every move they make, it's because they know it's really disruptive. So the way the news feels up front feels very, very unbecoming for the company. But I actually think what they're doing with the pill, with cancer, with bringing personalized medicine, I'm passionate about peptides. I'm invested into the peptide and HRT business. I believe HIMS is the best public vehicle for this. I think it's very disruptive, and I basically doubled my position. So I rode it from this price all the way up to 80 or so, 75, 80, whatever it was. I've ridden it all the way back down, and I've doubled my position here.
Wow. It's a great contrarian play. If you're right, it's going to pay off.
I mean, again, this is how I've made my living, though, is I do make some asymmetric bets on things. I mean, at this price, it's not a bad deal. It's not overpriced here.
No, I mean, if the thesis holds, so this is an insane opportunity. There's like a 70% drawdown, but either way, we're at time. The market is roaring. I am looking right now.
Did we break the level that you were saying?
We're right below it right now.
It keeps getting rejected there.
Yeah, a little. So,
what level does it need to hit?
It needs to close above 606.
Oh, the QQQ.
Yeah.
Okay, I'm looking at dude, it's 605.31.
I know it's just chilling there. If you guys are ones who say technical levels don't matter, just look at the 21-week EMA on Qs. Either way, we're back. We took a 1-week absence from my out-of-state move. Now we are going to continue this weekly session going forward. Let's hope for a strong finish for the day so we can all touch some grass this weekend and then come back recharge for another week of earnings.
I was touching grass anyway. I was rolling in it yesterday. I was like, I absolutely needed to get outside and look at the sun. I literally stood outside on my balcony and just looked at the sun for a while. Just like literally stared into it. I'm like, everything's okay. Everything's okay. Everything's okay. Because it doesn't matter how much you've been through this. It's just the same feels come back every time you show.
Yeah, totally.
It's by the way, it's being superhuman. So, but appreciate all you out there. Appreciate the whole community, all you that ask great questions. Sorry we didn't get to. There was a lot, so if we didn't get to some of the questions, feel free to put them in Shay's Twitter stream. He loves to just answer a lot of questions in his next stream. He's on it all day. I do unfortunately have some real work, so I can't do that today. But, no, I'm kidding. We appreciate all of you. Stick with us. We'll be back. I think next week we're back.
Yeah. Same time.
And we got more cool things happening. I mean, it was awesome to have that Defiance launch and that partnership, and There might be more interesting things happening at the Futurum Equities side. We may have a new person coming on team, a new living intelligence model for semiconductors that we'll be rolling out pretty soon. I can't say much more than that, but it's epic. So stick with us. We've got way more in hand. And of course, we love you being part of our community.
See you guys next week.